I'm Abolawe. On today's episode, we'll be looking at account/ledger. So let's begin. So accounts. So these two words can be used side by side, but there is a small difference between these two words. Now, the difference is just that accounts are recorded in a ledger, and a ledger is used to record an account. In a ledger, you will find different accounts of the business organizations. So a ledger is more of a principal book of accounts that is used to record different accounts of a business organization. So this is all we're going to do now. Let's talk about the subject of accounts extensively so that you'll be able to understand the difference between the two at a greater length. So let's talk about accounts now. So accounts. So accounts, like we said, let me describe how an account looks like. This is the simplest form of an account. The simplest form of an account is this. We call it T format. T format. So an account is classified or is divided into debits and credits. So this is the debit side. That's the debit side. And this is the credit side. The credit side. So should you want to define an account, now let me correct a notion here that some students will usually say, I offer accounts, this and that. No, the subject is not account. It is called financial accounting. So let's define what an account is. An account is a page of a ledger that is divided into two parts of debits and credits by a thick vertical line, on top of which there is an horizontal line where the name of the account is usually written. So this is the name of the account. Let's say Ade's account. So this is how an account looks like. So in a ledger, you will find different or many accounts inside a ledger. You find different accounts. You find Ade's account, you find capital account, you find drawings account, you find debtors account, you find creditors account, you find Dangote's account, and so on and so forth. So this is the simplest form of an account. So an account is a page of a ledger that is divided into two parts of debit and credit. This line here is usually thick. So it's divided by a thick vertical line into debit and credit, on top of which there is an horizontal line where the name of the account is usually stated. So this is how an account looks like. So let's talk about the classifications of accounts that we have in financial accounting. So classifications now. So classifications of an account. Classifications of accounts. So basically, account is classified into two. We have personal and impersonal accounts. So personal accounts, and we have impersonal accounts. Now let's begin with personal accounts. Personal account, these are accounts that bear the name of an individual or a business organization. Now, personal accounts, in other words, they are accounts of natural persons, that's individuals, or artificial persons, that's business organization. Now, you may want to ask, artificial person, yeah, in financial accounting, we usually regard business organization as artificial person because when you start a business, okay, let me say when I start a business, that business has been given birth to, has been established. Then while the businesses that we all have started are growing, some will die in the process and some will continue to exist till foreseeable future time. So a business is seen as a person that is given birth to, then it will keep growing, it will face some difficulty, it will overcome it. Some will not be able to overcome it, some will die, and some will continue to exist until foreseeable future time. So when we say personal account, they are accounts that bear the name of an individual or a business organization. And we did say that you can also refer personal accounts as accounts of natural persons, that's human beings or persons, or business organization, that's artificial person. So let's give examples of personal account now. So we could have, let's say, Sarah's account, Sarah's account. We could have Ade's account. We could have Chidi's account. Chidi's account. We could have Azizat's account. Azizat. We could have Aisha's account. Aisha's account. We could have Zenith Bank account. Zenith Bank account. We could have Dangote PLC company account or Dangote company PLC account. Anyone. We could have GT Bank account. GT Bank account. And the list is ended. So from here till here, they are natural persons account, that's persons or individuals. Then from here to here, that's artificial persons, that's name of business organizations. So this is basically examples of personal account, and the list is endless. Now let's talk about the second classification of accounts, which is impersonal accounts. So impersonal accounts now. Impersonal accounts. So impersonal account is further classified into two. We have real accounts, and nominal accounts. Nominal accounts. So these are the two classifications of impersonal accounts. Now, when we say real accounts, what do we mean basically? We mean accounts of tangible assets or nature. And tangible assets means, or tangible accounts means, accounts that can be seen and touched. So examples of real accounts now, that means accounts of what can be seen and touched, or that are tangible basically. So we have cash accounts. Cash accounts can be seen and touched. Stock. Another word for stock is inventory, which a business sells. Basically, what a business sells is the stock, the raw materials. It could be in form of raw materials. It could be work in progress. It could be finished goods. So that's basically. Then we have plants and machinery. Plants and machinery. Plant and machinery. We could have office furniture. Office furniture like your drawer, your fittings, and all that. Office equipment. Office equipment. We could have motor vehicle accounts. We could have plants. We could have, let's say, delivery van, and the list is endless. So all these are examples of real accounts, accounts of tangible nature that can be seen and touched. These are now nominal accounts now, which is the other classifications of impersonal accounts. We say it's classified into real and nominal. Nominal account is further subdivided into three. Then we have accounts of income. We have accounts of expenses. Then we have intangible assets. So nominal accounts basically are accounts of incomes, expenses, and intangible assets. And in other words, nominal accounts are accounts of gains, losses, and intangible assets. So income now, let's start with income. Income, another word for income is revenue. And revenue are those amounts a business realizes from its operating activities, investing, and financing activities. So examples of income accounts now, we have sales accounts, we have discounts receive accounts, we have commission receive accounts, rent receive accounts, interest receive accounts, We could have decrease in provision, decrease in provision, decrease in provision, and the list is endless. We could have lots of them, but these are some of the ones we are putting on the board now. But we'll still be drawing the charts, the organogram of an account. Then perhaps we'll be able to list some other examples in addition to this. Then let's go to expenses. Expenses basically are costs or amounts that a business incurs to keep or to run the day-to-day affairs of the business. I mean, the expenses you incur almost every day to run the day-to-day affairs of the business. So expenses are basically costs. They are small amounts. For example, we have examples of expenses accounts now. We have purchases, 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 purchases. We have insurance premium paid. When a business pays insurance premium to the insurance company, is an expenses. So insurance premium paid, insurance premium paid. We could have electricity. Electricity is an example of expenses. We could have rent, rent paid. And don't forget, rent paid is an expenses, but rent received is an income. Then we could have discounts, discounts allowed. Discounts allowed is an expenses. Why discount received is an income. Then we could have increase in provision. Increase in provision. Increase in provision is an expenses which will be written off to the profit or loss account, to the expenses account, that's expenses. Then decrease in provision is an income which will be added back to your gross profit in the profit or loss account. So we could have office expenses, we could have administrative expenses, we could have general expenses, we could have carriage outward and all that. All those are expenses accounts. Then finally, we have intangible assets. Intangible assets, they are not tangible, they are not what can be seen and touched, but they are used by the business to generate revenue. So examples of intangible assets, we have goodwill. Goodwill is an intangible asset. We have patent rights. Patent rights. We have copyright. All these are examples of intangible assets. We could have franchise. Franchise. Now, what do we mean by franchise? Although I will still get to explain all of these in our subsequent episode. Franchise is the legal rights that is given to a business to reproduce already produced goods by an inventor or by a business organization. And what that means simply is that if I want to start producing Coca-Cola in my home country, Nigeria, what that means is that I'll need to seek the license. I'll have to obtain the license or get a franchise from the original inventor of Coca-Cola. Then when I get that franchise license, it will serve as an asset to me, a right, a privilege for me to enjoy it, to produce, and that will fetch me revenue. When I eventually produce, I will sell. That will eventually fetch me revenue. So franchise is like a license that is obtained to reproduce a particular goods or services from an inventor. So that right or that asset covers me and it brings me money too for over a period of time. So franchise, as an example, is basically a legal right or a license. So I will be listing license to license, license. We could have trademark too. So trademark is also an example of intangible assets. So the list is endless. So these are examples of intangible assets. It's not limited to all this. There are other ones. Expenses, these are examples. They are limitless examples. Incomes, these are examples. They are limitless examples. And real accounts. So these are examples. Now, this is what we do now. We now have to draw the organogram, the charts of an account now. So let's do that. So that you will have a broader picture or understanding of the chart of an account. So that's what we want to do now. So let's quickly get that done by drawing the chart of an account. So accounts now, the charts, all in all. So accounts. So account is classified into two. We have personal accounts and we have impersonal accounts. Impersonal accounts. And we say personal accounts are accounts of natural persons, that's individuals, or artificial persons, that's business organization. So examples now. So we have uh, Azizat's account, we have Chidi's account, we have Chika's account, we have Sarah's account, we have Dangote PLC account, Dangote PLC account, we have Zenith Bank account, we have GT Bank account, GT Bank. We could also have Echo Plus. Echo Plus our boy. Echo Plus our boy. That's the name of our YouTube channel. We are non-profit making organization, but we are still considered a business, right? So Echo Plus our boy is also a personal account. Now, one thing I need to emphasize here is that we also have, let's say, we have debtors accounts. All these are also, we have creditors accounts, creditors. We have capital accounts. We have drawings accounts. Drawings accounts. All these are also parts of personal accounts. Now, something I need to stress here for your understanding, capital accounts and drawings account. This capital and drawings account, they are also called private accounts. The reason being that they are called private account being that they are specifically used for the owner of the business. And that means that anything the owner contributes into the business to keep the business thriving or to keep the business flourishing is called capital. We call it owner's interest or owner's equity. That's owner's contribution. That's capital. Now, whatever the owner contributes into the business, which is called capital, will be recorded in the capital account or in a personal account known as capital account. Then drawings account. Drawings account, whatever the owner takes out of the business for his own personal use or consumption is called drawings. And that drawings will be recorded in a personal account known as drawings account. So all these are still under classes of personal accounts. So I hope that is understood. Good. So let's move on to impersonal accounts. So impersonal account, like we said, is further subdivided into two, and we have real accounts, and we have nominal accounts. So let me rub up these parts. So we can also have debtors, creditors, capital accounts, drawings accounts, and all other ones we have. So real accounts now, we say real accounts are accounts of tangible nature. Accounts that can be seen and touched, that's basically real accounts. And examples include we have stock. Example stock, we have cash. We have plants and machinery accounts. We could have office equipment. You can touch office equipment. All these are tangible. We have motor vehicle. We could have delivery van like your long vehicle, your lorry, and all that. That's real accounts. Then nominal account, we say it's further subdivided into three, which is incomes, expenses, intangible assets, or gains, losses, and intangible assets. So here we have incomes, and we have expenses, and we have intangible assets. So under incomes, which is the same as revenue, and we have already said that the revenue of a firm can be gotten from operating activities. That's the normal, trading activities of the business, investing as well as financing. So examples of income, we have sales accounts, we have discounts receive accounts, We have commission received, rent received, rent received, interest received, interest received, decrease in provision, decrease in provision, decrease in provision, and the list is endless. So under expenses, expenses are costs that a business incur in the day-to-day running of the business. That means to keep the activities of the business going. There are some costs you incur every day. Those costs are termed expenses. And expenses, examples, we have discounts, discounts allowed. We have carriage, carriage outwards. We could have purchases, purchases, purchases. We could have increase in provision, increase in provision, be it for bad debts. Then we have rent paid, any rent paid, insurance paid, insurance premium that you pay. We could have electricity, electricity bills paid. You could have office expenses, administrative expenses, general expenses, wages and salaries, wages or salaries, anyone. Those are examples of expenses. Then the last but not least, which is intangible asset. Then we have goodwill. Goodwill is an example of intangible assets. Then we have patent rights, copyrights, franchise, license, trademark, and the list is endless. So these are some of the examples of intangible assets, and it is not limited to all these that we've mentioned. Expenses is not limited to this, and incomes also is not limited to this, or they are not limited to this. So there are other ones. So this is the organogram, the charts for an account. So I hope this is understood now. Then we go to ledger now. Let's talk about ledger. So this is the organogram. So let's go to ledger now. Ledger. Ledger. So that's with respect to accounts. So let's talk about ledger now. Ledger. So ledger, like we said, is one of the principal books of account that contains different business transactions of a business organization, or that contains different accounts of a business organization. So in a ledger, you will find different accounts. So basically, after the end of the period, the balance in a ledger will be taken or will be extracted and stated in a form or statement known as trial balance. Then when the trial balance is extracted and the two sides are equal, it means the postings or the recording in the ledger is intact. That's with respect to that. So let's talk about the classifications of ledger that we have. So classifications of ledger. So basically there are three classifications of ledger. We have sales ledger, we have purchases ledger, and we have general ledger. So sales ledger is a kind of ledger that contains the individual debtors' accounts or customers' accounts. So any details about your individual customer that holds you, or individual business organization that holds you, all those details will be contained in the sales ledger. So it is assumed that a business must sell on credit, and a business must also purchase on credit. So when you sell on credit to your customers, all the details of one customer owing you, they will find those details in the sales ledger. That's why we say sales ledger contains the individual debtors account or details on individual debtors who is owing you. And don't forget, a debtor could be a person, that's an individual or a business organization. So it contains the individual debtors account. So individual, just one individual debtors account or customers customers accounts. Then purchases ledger now. This contain the individual creditors accounts or suppliers accounts. Just like we said, a business must purchase on credit because you have to, in your balance sheet, that statement of financial position, you will have on your current liability as one of the components. That's bills payables. That's those whom you have to settle the outstanding, the liabilities. So when you purchase goods on credit, it means you are owing some suppliers or creditors. So the details of those suppliers, individual supplier now, one supplier or one creditor, will be contained or will be detailed in the purchases ledger account. So all the individual suppliers that you are owing as a business organization will be contained in the purchases ledger. So it contains, this purchases ledger contains the individual creditors or suppliers account. So individual creditor or suppliers accounts. So the purchases ledger contains the individual creditors accounts. And lastly, general ledger. General ledger contains all other accounts, all other details, apart from individual debtors or individual creditors accounts. So in this general ledger, from the word general, it can be used to record all other details or information or transactions aside from the details that relates to individual debtors or that relates to individual creditors. So for example, you can have uh, total purchases details. You could have total sales details. You could have total assets details in your general ledger, and the list is endless. So basically, general ledger is or contains details or information about or that is different from individual debtors or customers accounts or individual creditors or suppliers accounts. So an example of those details or information you could find in a general ledger are total sales, total purchases, total assets, and the list is endless. You have total stock details, and the list is endless. So that's basically with respect to the topic for today. So this is where we're going to be drawing the curtain. Continue to support us. Click the subscribe button. Share our videos to friends and relatives. I wish you an excellent and a brighter future in your academics endeavor. I'll see you on my next video. It's bye from me. Bye bye.